Today, we're getting into some pretty complex corporate financial documents. We're aiming to make them clear, especially for you, the individual investor, just trying to make sense of it all.
That's right. We're looking specifically at Doğuş Automotive Service, the ticker at A, that's DOAS, and their interim consolidated financials from January 1st to September 30th, 2025. These reports can be, well, dense.
Super dense. But our mission today is pretty simple. Translate all those accounting numbers into insights you can actually use. And we have to start with something really crucial, right? The inflation context.
Absolutely essential.
Yeah.
You cannot understand these numbers without understanding TMS 29. That's the Turkish accounting standard for hyperinflationary economies.
Okay, TMS 29. Why is that such a big deal here?
Well, because Turkey's seen massive inflation. We're talking a 3-year cumulative rate of 222% by September 2025. So TMS 29 forces companies to adjust their historical and current figures to the purchasing power of a single date, in this case, September 30, 2025.
Right. So it takes out the distortion caused by just prices going way up.
Exactly. It means we're comparing apples to apples. We can see if the company's actually growing in real terms, or if the numbers just look bigger because the currency is worth less. It's about finding the true performance signal.
Got it. Okay, critical context set. Let's start with the basics then. Who is DOA2?
Well, fundamentally, they're the main distributor in Turkey for the Volkswagen Group. Huge player. They're based in Sarıyer, Istanbul, started back in '99.
And Volkswagen Group means quite a few brands.
Oh, yeah. Think VW, Audi, Seat, Cupra, Porsche, Bentley, Lamborghini, even Scania trucks. They have a massive footprint in the Turkish auto market.
But it's not just cars, is it? I saw some diversification mentioned.
Correct. While automotive is definitely their bread and butter, Note 4 makes that clear they've got other things going on. Marine services, like Nova Marine and Riviera Yachts. Used cars, through their DoD brand.
And some newer stuff, too.
Yeah, quite forward-looking things, actually, like aerofoil e-foils and Medi electric bikes. Plus, they have a big stake in real estate through Doğuş GYO, so they're not a one-trick pony.
Interesting mix. What about ownership and, like, where they're heading strategically?
Okay, ownership. Doğuş Holding Eşver holds the majority, about 60.5%. The rest, 39.5%, is traded publicly on Borsa Istanbul.
And strategy? Any clues in the report?
Big clue. They set up a new subsidiary called D-Charge in May 2024. Its whole purpose is building EV charging stations. That's a major signal, you know. A real investment in the shift to electric. Requires capital, obviously.
Right, a move towards the future there. And running this whole operation, how many people are we talking about, and what's the cost at the top level?
Personnel numbers are up slightly. The average headcount across the group is around 2,139 for this period.
Okay, and management costs?
Key management pay, including the board, picked up a little bit. It was about 1.53 billion Turkish lira for the first 9 months of 2024. And it went up to 1.57 billion for the same period in 2025. Just a small increase.
Only a small increase. Keep that number in mind as we move into the performance because, well, let's talk profit and loss. The top line, revenue hasılat, actually looks pretty good, doesn't it? Even with that inflation adjustment.
It does. That's sort of the good news headline here. Real revenue, after TMS 29, increased by about 6.3%. Went from roughly 161 billion TL to nearly 171 billion TL year over year for the 9 months. So they are selling more stuff.
Selling more stuff, but making less money on it. Because the next line item, gross profit, tells a very different story.
A very different story. This is the first major warning sign. Gross profit actually fell. Despite higher revenue, it dropped from about 26.7 billion TL down to 22.7 billion TL. That's a drop of around 15%.
15% drop in gross profit. That means their cost of goods sold, or maybe import costs, or just squeezing them hard, right?
Squeezing them incredibly hard. Whatever they're paying for the vehicles and getting them ready to sell is rising much faster than the prices they can charge. Severe margin compression.
Okay, so the gross margin is under pressure. But what about the core business health? The core operating profit, ESOS, Faaliyet current.
Yeah, this is where it gets quite alarming. Core operating profit absolutely collapsed. It plunged by 36.5%.
36.5, wow.
Yeah, fell from nearly 17 billion TL in the first 9 months of 2024 to just 10.7 billion TL in 2025. That massive drop just wipes out any positivity from the revenue increase. It signals serious trouble in translating those sales into actual operating profit.
What's driving that? Did operating expenses go wild?
Well, general administrative expenses did rise quite a bit, from about 7.2 billion to 8.8 billion TL. But there's a specific line item in Note 17 that kind of jumps out.
Oh, which one?
Donations and aids. It increased substantially, went from about 2.45 billion TL to 3.14 billion TL in the same 9-month period.
Wait, hang on. Their core operating profit is down by over a third, indicating like serious financial stress.
Right.
And they increased donations by almost 700 million lira.
That's what the numbers show. It's an interesting choice. Typically, when margins are under this much pressure, you'd expect management to be cutting back on discretionary spending, not increasing it. It definitely raises a question about priorities during a tough period.
Yeah, that seems odd. So with operating profit falling so sharply, what's the final hit to the bottom line? Net profit.
Predictably, net period profit took a massive hit too. It fell drastically, down 37% from just over 8 billion TL to about 5 billion TL.
And that translates directly to earnings per share, right?
Yeah.
What does that look like for the investor?
Exactly. ETS, which is what really matters for shareholders, dropped from 36.42 TL per share down to 22.96 TL per share. Again, that's a 37% hit in real terms. Seeing revenue go up while profit craters like this, it tells you something big is happening with their capital structure.
Which brings us neatly to the balance sheet. And this, I think, is where we find the explanation for why profits fell and where the cash went. Let's talk inventory.
Yes, inventory, Stockler. This is without a doubt the biggest story in this entire report. It's staggering.
Staggering how?
It more than doubled. In just 9 months, from the end of December 2024 to the end of September 2025, inventory jumped from 19.3 billion TL to 41.2 billion TL.
It doubled. 41 billion lira tied up in inventory. That's enormous. What is all that stuff?
It's almost all vehicles. The report breaks it down. Goods in transit basically doubled, going from about 11 billion to nearly 21 billion TL. And commercial goods vehicles almost tripled, from 6.4 billion to 18.1 billion TL.
So they made a conscious decision to just load up on cars. Why?
It looks like a massive strategic bet. They're aggressively accumulating stock. Maybe they're anticipating continued strong demand, maybe hedging against the lira falling even more, or securing supply. Whatever the reason, it's a huge capital commitment.
A commitment that needs funding. Where did the, 22 billion lira needed for this inventory surge come from? Did they just have it lying around?
Absolutely not. They basically emptied their bank accounts and borrowed heavily. Cash and cash equivalents just plummeted, down 75%.
75% drop in cash.
Yeah. From 11.8 billion TL down to just under 3 billion TL. And the impact on their ability to generate cash from running the business, well, it's brutal.
Okay, let's look at cash flow from operations. That's the real health check.
Right. It is. And it was a complete reversal. In the first 9 months of 2024, they actually generated positive cash flow from operations, about 1.96 billion TL. But in the same period in 2025, massively negative. We're talking negative 12.4 billion TL.
Negative 12.4 billion. Ouch.
Ouch is right. And the report explicitly states this huge negative swing is mainly due to that massive increase in inventory.
Yeah.
They basically used all their operating cash, and then some, to buy cars.
So cash reserves wiped out, operations burning cash. They must have borrowed, right, to fill that gap?
They did. Short-term borrowings went through the roof, jumped from 5 billion TL to almost 12 billion TL. That's a huge increase in short-term debt load very quickly.
So the overall picture shifts dramatically. They went from being pretty cash rich at the end of 2024 to having low cash and much higher short-term debt just 9 months later, all because of this inventory bet.
That's the core risk story right there, a major shift in their financial structure and risk profile.
Okay, but is there anything providing a cushion, any other assets or investments helping to offset this strain on the main business?
Yes, thankfully there is. And it's quite significant. We need to look at their investments accounted for using the equity method, think joint ventures and associates. Their value held pretty stable, around 11.76 billion TL total.
Stable value, okay. But did they contribute anything to the profit line?
This is the crucial bit. The profit contribution for these investments did a complete 180. In the first 9 months of 2024, they actually recorded a loss share from these investments of about 1.44 billion TL.
Oh, loss, okay.
But in 2025, it swung to a profit share of 1.31 billion TL. That's a positive swing of over 2.7 billion TL.
Wow, so that turnaround really helped prop up the bottom line.
Massively. It provided a significant buffer against the collapse in operating profit. Without that positive swing from investments, the net profit picture would have looked even worse. The report highlights K, the vehicle inspection joint venture they have a stake in, as a key asset whose value and contribution improved.
Right, 2VTRK is a big name. And what about their real estate holdings through Doğuş GYO? Are those significant?
They are pretty significant, yeah. Investment properties like Gibbs Center Shopping Mall and Diofis Maslak are valued at around 19.4 billion TL on the balance sheet.
Any risks tied to those properties?
Well, there's a notable mortgage mentioned, a 100 million euro mortgage secured against some of these properties, specifically mentioning Gibbs Center. So there's leverage there too.
Okay. Now, one more thing on the balance sheet. You mentioned net profit was positive, around 5 billion TL, but total equity actually went down slightly. How does that work?
Good catch. Equity dipped a bit from about 69.9 billion to 68.1 billion TL. The main reason for that, as shown in the equity movement table, was a large dividend payment. They paid out 6.83 billion TL in dividends during this period.
So even while making this huge inventory bet and seeing operating profit fall, they prioritized paying out a big dividend to shareholders.
Seems so. It's another one of those interesting management decisions in the context of everything else happening.
All right, let's quickly touch on some key footnotes. Related party transactions, always important for investors. Was there much activity there?
A lot of activity. The volume of business done with other companies within the Doğuş holding group is very high. For example, they booked 1.72 billion TL in income from Doğuş Holding itself and 1.3 billion from VDF Filo, which is likely the financing arm.
And on the expense side?
Also significant. Nearly 3 billion TL in expenses paid to Doğuş Inşaat, the construction arm, and about 1.4 billion to VDF.
So for you as an investor, especially a minority shareholder, what's the takeaway from all that intercompany trading?
It just means you need to be confident that these transactions are happening at fair market prices, what they call arm's length. When billions are flowing between related companies, there's always a potential governance risk that value might be shifting unfairly within the group. It requires extra scrutiny. And briefly on tax, the standard corporate rate is 25%, but there's some complexity mentioned around deferred taxes for Doğuş because of changes to REIT tax exemptions. They're using a 30% rate for some of those calculations. Just a technical point, but noted in the report.
Okay, so let's try and pull this all together for the listener. What's the final picture? We have revenue up in real terms.
Right, revenue is up, but that's overshadowed by a serious crunch in profitability. Gross profit down 15%, core operating profit down a massive 36.5%.
Driven largely by this enormous intentional buildup of inventory, more than doubling it.
Exactly. A huge strategic bet that converted a strong cash position into physical stock, leading to deeply negative operating cash flow.
Which then required a big jump in short-term borrowing to finance it all.
Correct. The saving grace, really, was the strong positive swing from their equity investments, like Tüvitiras, which helped cushion the blow to the net profit line.
So the implication here is what? Investors need to weigh the potential upside of holding all that inventory against the immediate pain of lower profits and higher debt.
That's precisely it. Is this inventory hoard a smart hedge against future inflation and supply issues? Or is it a massive pile of capital sitting there costing money while the core business struggles to make a profit?
Which leads us to the final thought, the big question going forward. They're pushing into EV charging with D-Charge, which needs investment. They've tied up billions in car inventory. So can Doğuş actually sell through that massive stock fast enough to turn the operating cash flow positive again?
Or will that pile of inventory and the debt they took on start to really drag down performance, potentially overwhelming even the buffer they get from those valuable investments? That's what everyone will be watching in the next reporting period. Definitely something to keep a close eye on.